On this edition of For Pete's Sake, we're going to take a look at physical demand coming out of Hong Kong, another central bank cut its rates, and more coming up. Hey Peter, thanks for joining me today.
You're welcome, Alex.
Peter, in your early morning blog, you referenced physical demand in Hong Kong. What's going on there?
Well, I put out a blog this morning, or I call it a blog. It's just a quick note that I've been watching the markets in the Far East, and the trend over the past 2 weeks has been significant buying coming out of the Far East, met with selling coming out of ETF redemptions out of the U.S. Yesterday, at about midnight East Coast time, I was watching the Tokyo market open, and the first wave came in, and over the past 2 weeks, the first wave was a buying wave, and yesterday, for the first time, the first wave was a selling wave, and took gold down to the 1456 support level, where it bounced off. But this morning, when I looked at it, the fact that the Chinese, at least in Hong Kong, and again, it could be the May 1st holiday, it could be a light week over there. The fact that they didn't take off the metal at the support levels aggressively made me cautious, and I suggested that this market might break through support when New York opened, which unfortunately it did, and we're trading down in the low 1440s right now.
Today, the Reserve Bank of Australia cut its rates. What do you see happening from that central bank?
Well, again, the Australians, are just joining the club. I think the global economy is still fragile, and central banks around the world are continuing to be expansionary in their monetary policy until the economic rebound takes hold. And again, I think this will continue at least through 2013. Again, I hate sounding like a broken record, and I think it may run right through about mid-2014. So you have an underlying support, psychological support for the metals, in the sense that monetary policy is extremely expansionary. You have geopolitical events such as the recent issues with Israel and Syria that underpin the market to some extent, at least from the perspective that people don't want to be aggressively short while that is going on. I still think Iran is going to be an issue before summer with the Israelis. So there are some fundamental issues that continue to underpin the market. My concern with the market, and I voiced it last week, I thought the market felt heavy then, is that people are getting tired. They need yield. A lot of the medium-sized investors have not participated in the stock market. Rates on their portfolios from a bond perspective are pretty much still at zero. So they're looking for something, and they're starting to chase the equity markets, buying dividend stocks. And as a result, they see the precious metals as dead assets from a point of view of yield, and they've been liquidating.
Right. Now, last week, the ECB cut their rates. This Monday, Mario Draghi said that he's willing to be flexible. What do you see moving forward? As you said, fundamentals remain the same.
Well, I'm not in the camp of hyperinflation, but I do think this monetary expansion has the potential of creating an inflationary surge somewhere down the road. And by somewhere, I mean probably not until midway through 2014. But for that to happen, Draghi hinted at it the last couple of days that he may start charging the banks that are parking funds with the ECB negative interest, just to force these banks to lend money to the consumer. That's what's missing in this spiral, is that the banks have the money, but they're not lending it down through the pipeline. And without lending it through the pipeline, you don't have consumers chasing goods, which will create the inflationary spiral that a lot of analysts are expecting, which would be very price positive for the metals. I think it's coming, but I think it's at least a year away. I think the central banks around the world are fighting not an inflationary fear currently, they're fighting a deflationary fear, and are accommodative on their monetary policy. Should the economies pick up and get into gear, the Fed will be behind the curve, and the metals will, I think, then have their final leg before interest rates go much higher.
Well, there's a Bank of England meeting coming up on Thursday. Would you see that moving gold at all?
Again, I think they certainly won't raise rates. A best case scenario for them would be they would lower rates in line with the EU. But this is all baked into the market. I mean, the market now knows that the central banks are accommodative. You have geopolitical events around the world that are also price supportive for the metals, but the metals do not have upward momentum. And I think the reason for that is because they are not yielding a return. And, until there's a real scare or a potential other issue with the financial system, be it in Europe or wherever, some type of headline news, the metals look heavy, and, they could come down a lot more before they get to a level of real value from a perspective of price purchasing power relative inflation. But I still think that might be a year away.
All right, Pete, in the short term, what do you see happening with gold and silver?
Well, I think there's some initial support on gold in the 1438 range. It's broken through 1455, and again, if it gets over it, we'll be in the 1455, 1480 range where we've been for the past 2.5 weeks. But a close under 1455 today would indicate they're probably going to test the 1420s. And if that doesn't hold and we get back into the 1300s, there could be some serious damage. I do not think that we're going to see gold at 1320. But the 1378.85 range is certainly in play, which would take silver somewhere between 2150 and 22 from a range perspective.
Excellent, Peter. Thanks for talking to me today.
You're welcome, Alex.
And thank you for watching this edition of For Pete's Sake. If you have any questions or comments, please don't hesitate to send them to newsfeedback@kitco.com. Also, don't forget, Metals and Minerals Investment Conference, May 13th and 14th, coming up for Kitco News. If you'd like to register, please follow the link below. And finally, if you'd like to follow the conversation, check me out on Twitter, Alex_Letourneau. Thanks for watching.